Hello, good morning, ladies and gentlemen. I'm so happy to be with you here this morning. Let's confirm that we are good to go. So, if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I would like to see some feedback, please. All right, so let's see what we have here. Okay, so Susie MB, good morning. Thank you very much. 603, good morning. Harry, good morning to you. Thank you very much for that confirmation. 896, good morning. 964, good morning to you too as well. So I would like to take this as a positive feedback that we are good to go. And on this note, I welcome you all to yet another promising session on the X Train Speed Live. My name is Sheriff Daramolam, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us this week. For today, rather. So, for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to gather here as a community in anticipation of the New York session to review the pairs we have been monitoring to see how well they are doing and how we are going to be managing our existing trade as we also look out for more opportunities ahead of the New York session. At first, it might look a little bit overwhelming. Trust me, it's very simple. And if you continue to stay with us through the session, you will get to understand how this works and you will be able to use the information you have gathered here to make your independent decision. So on this note, I welcome you guys once again, and let's dive right into the business for today. Okay, so the first thing we are going to be doing here as usual is to ensure that we keep tabs with the fundamentals. So as usual, we are going to be checking the economic calendar, and what we normally do is to filter out high impact events that we are going to be that is going to be affecting the pairs that we are monitoring. So for this week, we are focusing on high impact events that will be affecting the US dollar, the pound sterling, and the Japanese yen. And from what we have here on the 23rd of May, Tuesday, we only have the S&P Global for the UK economic docket coming in today, which has already happened about an hour ago. And this came in at about 53.9, coming in with a negative variance of minus 0.97, minus 0.93, and minus 0.50 respectively, giving us an insight into a decline in the index, which is not a good signal for the pound sterling. So we are going to be looking forward to see how the market has reacted to that event and how we intend to position ourselves ahead of the New York session on that one. Then besides this, there are no high impact events. So what I did was to include the medium impact events so that we can actually have a sense of direction to see what is going on from that strata. And when I brought that out, I saw that we have a handful of speech coming in from the US and the UK docket. And so in about an hour or two from now, we have Logan's speech coming in. And Logan is the president and CEO of the Federal Reserve Bank of Dallas. So he's going to be having a speech in about 2 hours from now. Everyone will want to see what he's going to talk about, and as we might likely see some insight into the monetary policy from the US economy. Then we also have something coming in from the Bank of England. So Jonathan Askell, who is a monetary policy committee member, is going to be having a speech from the UK, and this is also something we want to be looking forward to. This is coming up in about 3 hours from now. And beside this event, we do not have any other events for today. So let's dive right into the chart and let's look at things from a technical standpoint on how we intend to position ourselves ahead of the New York session. So as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot, we had a very profitable move yesterday after we saw price action broke out of that resistant line at the $71.85 level. Yesterday it broke out to retest the structure a couple of times, giving us a privilege to be part of a buy position. And in fact, price moved about, how many pips was that from that level? Moved about 75 pips in our favor before this whole choppy situation began. So for those who took advantage of that opportunity, I hope you moved your stop loss, locked in some profits before the sell pressure came in to take us out of all our positions. So with that being said, let's dive right into what our expectation is going to be like for today. What are we looking at on this chart that will guide our trading activity? Now, the week started with a choppy situation. Remember, we saw this situation here, though price action started the week on a bearish note, as you can see here, around the $71.85 level. We saw price action drop into the $70.65 level, and that was the lowest point price action has been for this week, now giving us a support line to work with. And with continued selling pressure around the $71.85 level, prior to our live session yesterday, we had a resistant line to guide our trading activity. So we had a channel where price action was ranging between before our live session, and you know how we do it whenever we have this kind of simple flat channel. We want to wait for price action to either break out of the resistant line or breakdown of the support line for trading opportunity. And with the breakout of that resistant line, we had our first buy position for the week. Though the price did not move as expected, we saw price drop back into the resistant line. But one interesting thing happened here about an hour ago, as we saw an engulfing candle springing out of that structure. So the question now at this point is that, are we going to be seeing price action climb to the upside, continuing to the upside here, or are we going to be seeing a situation where price is going to be dropping to the downside from this area? Now, in order to have a better perspective into what is going on here, I want us to have a look at the 4 hours time frame, where I want to share with you a critical point in this market. So right on the 4 hours time frame here, the first thing we did here during our live session yesterday was to acknowledge the fact that price action has been bearish. And to do that, we connected the series of lower highs, as you can see here, giving us a bearish trend line. And if we zoom into the current structure, that is what has been happening in this market in the last 1 week, you will see that price action, as soon as it got into that trend line here, we begin to see some rejection of that line. And what this simply tells us is that sellers are trying as much as possible to negate the bullish attempt around that area. So buyers keep knocking on that ceiling. We continue to see sellers pushing price to the downside around that area, negating this buy pressure. Another thing I would like to share with you here is what has been happening since the beginning of this month. And if we look at the structure here, we acknowledge this bullish trend line after connecting the series of higher lows. So since the beginning of this month, we saw a situation where buyers have been trying as much as possible to break out of this channel between the $74 level and the $70 level since the beginning of the week. Now, let's talk about the expectations of buyers, the potentials that buyers have in this market. Now, the only thing I would want to see here to buy the US oil spot for today is to see price action break out of the resistance line, the trend line here, break out of the trend line. At this point, if price action breaks down the trend line, then we want to be looking out for buying opportunities. And if it so happens that price action retests structure when we scale down to our lower time frame, buy pressure around that area, this will give us more opportunity to be part of the bullish move. And one thing about the bullish expectation in this market is that we have the current market structure has a potential of giving us multiple entries. As you can see, we have the $72.50 level. If broken to the upside, will give us an opportunity to buy. And we also have the $74 area, which has been a very strong selling niche since the beginning of this month, where the breakout of that level also will be welcoming buying opportunities. So as long as price action remains above that trend line, price action breaks above that trend line, we feel comfortable in a buy position. But if price action continues to stay below the trend line, well, we would have no other choice than to look out for selling opportunities. But the only way we can be selling here is only if price action breaks down our key level, which is at the $71.50 level. And one interesting thing about the key level here is the fact that it also shares a confluence with that bullish trend line we identified earlier. So one thing we want to see in this market that will support a bearish momentum is for price action to break down the key level at the $71.50 level, which also would have broken down the trend line. And remember that we are not going to get too excited by jumping into any trade at that point, as we still need a confirmation to happen, and the confirmation we are going to be looking for will reflect on the chart as a retest of the structure. So whenever we have a breakdown of that $71.50 level, what we want to be looking out for is price action retesting that structure on our lower time frame, giving us signs that buyers are finding it difficult to break out of the $71.50 level. Then at that point, we want to feel comfortable selling. And if it so happens that price action breaks down the $70 area, remember this level had been a very strong buying niche since the beginning of this month, a breakdown retest of that level would definitely incite another wave of bearish momentum. But if you ask me from my own point of view, I'm leaning towards a bullish momentum. That is, I'm expecting that price is likely going to be breaking out of that trend line. But if it so happens that price action drops to the downside, we definitely want to be on standby. But I think price will break out of the trend line, and if it does, we want to scale down to our lower time frame. Look out for retest of structure, buying pressure, signs that sellers are losing momentum. Then we can join that rally to the upside. If you do have any question regarding what I just explained, feel free to let me know right in the comment section. And for you to be able to remember what we talked about here, you want to screenshot my screen so that you can use it as a reference point whenever you're about to make your individual decision for today. So that is that on the USOil spot for today. And so I will be moving on to the next pair. So the next option we are going to be looking at this morning is going to be the US Tech 100. Now on the US Tech 100, what was our expectation yesterday? What did we see on this chart that made us to open a position on this one? So at the beginning of the week, we saw price action caught within a range. So we saw the resistance line at a 13,825, and we had the lowest point price action got to this week had a 13,745. So we have this flat channel we had here. And one thing we normally do whenever we have flat channel like this is to wait for price action to either break out of the resistance line or break down of the support line for trading opportunity. And with our buy stop order placed above the resistance line at a 13,825, we had our first buy position for the week, and we saw our price action move significantly in our favor, moved over 100 pips in our favor before the sell pressure began. And I do hope you moved your stop loss accordingly to lock in some profit. As you all know, whenever price action moves significantly well in our favor, we definitely want to be moving our stop loss to secure the current position. And if you had done that, you would have been taking out with some profit, at least probably a minimum of 50 pips to catch there on the US Tech 100. And for those who took advantage of this opportunity, well done to you for being on standby to catch that move. And for those who missed out on this opportunity, let's look at the market together again and see if we are going to be having another chance to join a bullish momentum, or probably we could be seeing a bearish move to the downside. So in order to have a better perspective into what is going on here, I would like us to scale up into the 4 hours time frame so that we can have an holistic perspective into what is going on in this market. So right here on the 4 hours time frame, this was what we were able to come up with yesterday. So we saw this, hold on a second, we saw this whole structure. So what we did here was to consider trading activity since the beginning of this month of May. And you can see here that price action has been bullish. And to further emphasize the strength of the buyers, we connected the series of higher lows here, giving us this bullish trend line that you can see here, and price action had consistently respected the trend line. But something interesting happened last week following the impulsive move that we took advantage of last week. Remember, we saw this impulsive move from the 13,400 level into the structure, and as soon as price action got into that $13,910 area, we saw how price action fell into a flat channel, as you can see here. So in the last in the last 4 days now, price action has been ranging between the $13,910 area and the 13,780, giving us a clue into the level of indecision in this market. And you all know how we do it whenever we have a simple flat channel like this. We want to remain patient, waiting for price action to give us a signal, which will be coming in the form of either a breakout of the 13,910 or the breakdown of the 13,780 for a trading opportunity. So this was our perspective during our live session yesterday, and we were able to take advantage of a bullish momentum, hoping that price action will break out of the 13,990 area to make this whole structure that we have here transition into a trend continuation pattern. But one interesting thing we saw here yesterday was the fact that as soon as price got back into that 13,910, we saw another sharp rejection of that area. In fact, we had a shooting star candle, which from a technical standpoint informs us of the presence of sellers around that area. And with another retest of the structure the second time in the last 4 to 5 days, it's a sign that sellers are still very, very strong around that area. And this will want us to consider the potential of a possible retracement anytime soon. And if we look at this whole structure from a psychological standpoint, majority of the market participants who had bought at a very cheap price, let's say around the 13,400, leading into this increased demand, making price to skyrocket into the 13,910, will at one point want to be doing some profit-taking activities, which will probably reflect on the chart as a retracement of that impulsive move, probably into the trend line to incite another wave of bullish momentum, or probably break down the trend line to incite a sell-off. So if we are going to capture that retracement, then we want to see a reversal pattern. So there is a likelihood that the consolidation phase we notice here could transition into a reversal pattern in the form of a double top structure, where the $13,780 area will become the neckline of our reversal pattern to incite the retracement move. So the only way we are going to be selling the US Tech 100 is to see price action break down the neckline area of the 13,780, retest of structure in our lower time frame to give us an opportunity to sell, after which price action gets into the trend line, we move our stop loss to secure the current sell position and look out for how price action will react to that trend line to determine if we are going to be adding more sell position or get ready to join another wave of bullish momentum. So that is the first scenario we are going to be looking at, waiting for price action to break down to 13,780 to signal a retracement move. The other possibility that will happen here is for price action to break out of the 13,910 to make this a trend continuation pattern to incite another wave of bullish momentum. And personally, I would want to see price action break out of that resistance line first of all, retest or structure my lower time frame to give me a confirmation before I join that move to the upside. Now that we have an holistic perspective into what is going on here, we want to scale down into a 1 hour time frame to see how participants has been reacting to this area around the 13,850 level to decipher if price is likely going to be going to the downside or probably going to the upside. Of course, we don't want to wait for price action to break down this neckline first of all before we want to join, as we might likely be able to maximize the potential of the bearish move to catch the 60 pips, 65 pips move even before the breakdown happens. And if it's going to go to the upside, we can as well maximize our potentials in the buy position by joining early enough. So that is why we are going to be scaling down into the 1 hour time frame to see how price action is reacting to this level, to see if we can also be part of that move early enough. So when we scale down into our 1 hour time frame, this is what we have here, and this is what we are going to be using to guide our trading activity for today. Now for today, we have a trend line which we are going to be using. So we can see that since the beginning of this week, we have been seeing buy pressure. We have the pivot, we have one pivot low here, we have the second one here. Now the question is, will this be the third one to incite another wave of bullish momentum? So in order to confirm this, we want to have a trend line. I think this is not going to be suitable, so we are going to be using the candle chart. So we have a trend line here figured out. So I want to make this thicker so that it can emphasize its importance at this juncture. So we have a trend line here where price action has been respected since the beginning of the week. So we are going to remain patient at this point to see how price action will be reacting to the 13,825 level, which you can see here also shares a confluence with that trend line. And if we consider the fact that price action broke out of our resistance line yesterday, where from a technical standpoint, whenever price action breaks out of a key structure like this, we expect it to come back and retest that level to incite a trend continuation. So it's very important that we remain patient around this area, where we want to see how price action reacts to this area to decide if we are going to be buying or selling. So as long as price action remains above our trend line, we continue to feel comfortable in our buy position. So what I'm looking out for to buy here is to see a double bottom structure right on my lower time frame, breakout retest of the neckline of the double bottom structure to join the bullish momentum. And if this happens, we have a buy stop order above the $13,910 area to join a trend continuation to the upside. And if the opposite happens at this point, where price action breaks down both the trend line and the 13,825, then this will be a beautiful sign that this trend line may no longer have the capacity to reject selling pressure in this market. So if a breakdown happens, we want to be getting ready to sell, but remember, we are not jumping into a conclusion, as we need a confirmation, which will come in the form of a retest of either the 13,825 or the trend line. And most importantly, we want to continue to see selling pressure below the structures to give us an insight into the sell momentum in this market. Then we could join the sell move, and a further breakdown of our key level at the 13,780 will welcome more selling opportunities. Breakdown of the 13,745 also will welcome more opportunities in this market. So that is how we are going to be trading this one for today. And for the sake of the fact that we have been citing buy pressure here, let's scale down into the 15 minutes time frame and let's see if we could actually find a position to take above this trend line in any moment from now. So we shall scale down into the 15 minutes time frame and let's see if we could spot a reversal pattern around this area. So at this point, we are yet to find a reversal pattern, though we have this impulsive move here, price dropped here. So if we see something like a higher low, that price was unable to break the previous low, then at this point we want to anticipate a trend continuation to the upside. Now another thing I would like to show us on the 15 minutes time frame is that since price action tested the $13,910 level here, we have been seeing some bearish lower lows and lower highs. So we want to connect the series of lower lows and lower highs on the 15 minutes time frame so that we can also use it as a yardstick to be part of a bullish momentum. So to buy the US Tech 100 above that structure we identified on the 1 hour time frame, we want to see price action take out that trend line, take it out, giving us a sign that the trend line may no longer be strong enough to reject the bullish attempt. So we have a key structure at the 13,850 that will help us to guide this opportunity to the upside. So I have it mapped out right now, 13,850. So a breakout retest of the 13,850 will give us a confirmation that buyers are now here to stay. Then we join the bullish momentum to the upside. So I would want you to mark this out on your chart so that you can be able to use it as a reference point. So a breakout of the 13,850 would have broken out of the trend line too as well, giving us the opportunity we are looking for to buy the US Tech 100 for today. But if that does not happen and price action continues to go to the downside, then definitely a breakdown of the 13,825 level, which we identified here on the 1 hour time frame, a level which we said also shares a confluence with our trend line, will be giving us an opportunity to sell the US Tech 100 for today. So that is how we are going to be trading the US Tech 100. Mark this out on your screen, and if you want to, screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this option. So that is that on the US Tech 100. If you have any questions, feel free to let me know in the comment section while I move on to the next pair for today. So what's the next pair we treated yesterday on the let's see, what pair was that? Hold on a second, I want to check it out. Give me a moment, please. I'm trying to load up the sequence of which we chose the instrument we traded yesterday so that I can just follow that same sequence. Okay, so the next one we are going to be looking at is the XAUUSD. And on the XAUUSD, we have been very profitable on this commodity in the last 24 hours. So I would like us to quickly look at what has really been happening in this market in the last 24 hours. So the first thing we did here yesterday on the 1 hour time frame was to monitor how participants in this market has been reacting to that our key level at the 1,980. So remember, at the beginning of the week we acknowledged the 1,980 as our key level for the week, where we said if price action breaks out of the neckline of that key level and retest it, we are going to be looking out for buying opportunity. But if the sell pressure continues right below the 1,980, we will have no other choice than to continue to look out for selling opportunities. And coupled with the neckline there, we identified a flat channel where we saw our price action was initially consolidating between the $1,982 $1.35 level and the $1,971.50 area. So we had a very choppy situation which lasted about 12 to 13 hours in this market. And you know what we said here yesterday, that we want to see price action either break out, retest the 1,982 to buy, or we look out for a breakdown, retest of the $1,971.50 level to sell. And we saw what happened here during the later part of yesterday. It took quite a long time before price action finally found that momentum. As you can see, throughout the New York session yesterday, we saw how the market was so choppy, ranging between the 1,980. But the fact that price action was trading below the 1,980, it was a very good sign that sellers might likely come in. So with our sell stop order below the $1,971.50 level, we had our first sell position for the week triggered. And since then, price action had continued to find lower lows and lower highs. And at this point, if you are taking advantage of that move, kudos to you, as you will currently be running with over 150 pips in profit on this one. So if you have a sell position running right now and you're still in the trade, you know how we do it. The next thing we want to be doing right now is to secure our current sell position by moving our stop loss accordingly. And from the look of things right here, I'm suggesting that we have our stop losses placed at an area between that 1,964 level, as we have a structure around that area that we are going to be using to guide our trading activity for today. So secure your position right now and let's look out for more trading opportunities. So now that we have secured our position, what is going to be our plans for today? What are we going to be doing? What are we going to be seeing on this chart to sell, or what are we going to be seeing on this chart to buy? Well, the first thing I would like us to do here is to scale up into the higher time frame. Let's see what's going on from an holistic point of view, after which we are going to come back into the lower time frame to make a decision. So right here on the 4 hours time frame, this was what we saw at the beginning of the week. We had this descending channel figured out. And it's quite obvious that since the beginning of this month, price action has been bearish, and we have a descending channel to confirm that after connecting the series of lower lows and lower highs. However, since the later part of last week's trading session, we saw how the 1,950 and the 1,957 level had been a strong demand zone in this market. So we saw that when price dropped into the 1,950, 1,957 area on Thursday and Friday, we saw buy pressure resume around that area. And right now, price is back into that structure. As you can see, it has been oscillating around that area in the last 4 hours now. And the question here is, will this demand zone become a platform for another wave of buying opportunity in this market, probably leading back into the resistant line of that descending channel we identified earlier? Or are we going to be having a situation where price will be breaking down that demand zone, taking out all the buy positions there to incite another wave of bearish momentum? So this is what I want us to see here on the 4 hours time frame, so that we can be on the same page when I start explaining things on the 1 hour time frame. And another thing I would like to let us know here as well is the fact that price action is currently trading along the support line of that descending channel I just identified earlier. So now let's go back into the 1 hour time frame and let's see how we want to be part of any trading opportunity around this area. So right now, this is the 1 hour time frame. We have been in a sell position. Price action has broken down off a key structure at the 1,964, giving us signs that we are on the bearish momentum, at least since the beginning of this week. And because of this setup here, lower lows and lower highs, it's a sign that sellers are actually dictating the pace, at least in the last 24 hours. And with price back at a very strong support line here at the 1,957, it is very, very important that we remain very patient to see how price action will react to the structure. Now, let's talk about the expectations, the potentials of the sellers in this market first of all. Now, to sell or add more position to our existing XAUUSD trade, we want to see price action take out the buy positions, break out the structure, and scale down to our lower time frame to cite selling pressure below this area. That is, we want to see signs that buyers are finding it difficult to climb back above the 1,957 to be part of a bearish move to the downside. Remember, our TP targets is right within the 1,940 and the 1,935 for this week so far, and depending on how price action reacts to that level will determine if we are going to be adding more sell position. So we are only selling if price action remains below the 1,957. Then another thing I would like to also acknowledge here is this trend line we had here yesterday after we connected the series of lower highs. So we had a trend line which we are also going to be using to guide trading activity. Now, if buy pressure resumes above the 1,957, bringing price back to the upside, ensure you have moved your stop loss on our existing sell position, please. If price action continues to the upside, we want to see how it will react to this trend line to give us a signal of what to do next. So remember, we had this trend line figured out since the beginning of the week. So if price action breaks out of that trend line to the upside, then we want to be getting ready to buy. Now, if a breakout happens, the next thing we do is scale down into our lower time frame. Look out for price action retesting the structure. Look out for buying pressure above this area. Then we can join the trend continuation to the upside. So what this simply means is that if price action ever breaks out of that trend line, that is when we want to consider selling the XAUUSD today. But if price action gets into that structure and instead of breaking out of that level, we continue to see selling pressure resume again, then we want to have a sell stop order below the 1,964 to join the trend continuation to the downside. So that is how we are going to be adding more sell position to our existing trade if price action gets into that trend line. So we have two key structures that we are going to be using to guide our trading activity today for the buying opportunity. We want to see price action break out both the 1,964, have the trend line there to the upside, buy pressure above that level for us to feel comfortable buying the XAUUSD today. But if price action finds selling pressure below that area, we look out for selling opportunities. And at this point in time, we also have a breakdown already happening at this point. So we want to scale down into our lower time frame to look out for retest of the 1,957 to be part of another wave of bearish momentum. So if you have a sell position running already, we want to wait for a retest of the structure to add more position to our existing trade. Now, if we scale down into the 15 minutes time frame, let's see what is really going on there. Okay, so right now we have a retest of the structure. So I'll advise that we allow this candle to close. Here it's going to be closing in about 1 minute from now. So if this candle closes below the 1,957, let's have a sell position right below the 1,955 to join another bearish move to the downside. So let's keep this in mind while we continue to monitor price action going forward. All right, so with that being said here, if you have any question regarding what I just explained, feel free to let me know right in the comment section, and trust me, I am willing to be of help in that regard. And so let's move on to the next pair. Let's see what we have in the comment section before we go on. Okay, I can see Emrati. Good morning, Emrati. Nest57, good morning. Bonbino, good morning to you. Firelesty, good morning to you too as well. Hello, Cast, how are you doing today? Hey, Steamroller, good morning to you. All right. I hope you were able to scoop in the profit we made on the XAGUSD yesterday, Steamroller. It was quite a profitable 24 hours. Okay, we shall be looking at that in a moment. All right, so let's move right into the next pair for today. And what is the next pair we are looking at? Oh, that's the XAGUSD. So moving on right now, we are going to be moving on into the XAGUSD, which was one of our most profitable trade in the last 24 hours actually. Price action just kept on going to the downside, and in fact we have two positions running on the XAGUSD so far today. So let's look at what our expectations were during our live session yesterday. What did we see on this chart that made us to consider selling the XAGUSD? Now, at the beginning of the week, we acknowledged the fact that price action was a little bit choppy, where we saw price action ranging between the $23.90 level and the $23.64 level here, as you can see. So we had both the resistance line and the support line of that channel mapped out. And you all know how we do it whenever we have this kind of channel. We want to see price action give us a signal to either in the form of a breakout of the resistance line to give us a buy opportunity, or the breakdown of the rest of the support line to give us a sell opportunity. And in addition to this channel, we identified a trend line which has consistently been respected since Thursday of last week's trading session. So when we connected a series of higher lows, we had this trend line figured out. And one thing we agreed during our live session yesterday is that if price action remains above the trend line, we want to be looking out for buying opportunity after the breakout retest of the $23.90 level happens. And we also mentioned here that if price action does not climb to the upside and instead it breaks down, retest the trend line, then at this point we want to start considering selling the XAGUSD. And this was exactly what happened. And during our live, during the I think 3 to 4 hours into the New York session, we saw how price action broke down the trend line, giving us a sign that sellers are gradually building a momentum in this market. So with that situation, we had a couple of retests of this trend line, which was an opportunity to sell. If you are taking advantage of that move there, well done to you. But what we agreed here yesterday is that we are going to be having our sell stop order just right below the $23.64 level to trigger our sell position. So we saw price breakdown retest the structure to continue to the downside, and we also agreed here that the $23.50 level, if broken to the downside, we are going to be adding more position to our existing trade. So far so good. Since yesterday, the first position is currently running with about 47 pips in profit, which is quite good. And we also have the second position running with about 35 pips, so we have roughly over 80 pips running in profit on the XAGUSD for today. So for those who have been part of this move, well done to you for being on standby to have caught this opportunity. Now, going into the New York session today, what is going to be our plans? What do we intend to do? How do we intend to trade this commodity today? Well, the first thing we are going to be doing here, since price action has moved significantly well in our favor, and if you still have a sell position running at this point, you all know what we do. The next thing we are going to be doing right now is to secure the current sell position. And now to secure that, we want to look at the previous structure, which falls exactly around the $23.35 area. So around that area seems most appropriate to lock in some profit here. Let's give just right above that area, let it be above so that we can give room for price action to breed, hoping that price action will still continue to the downside. So now that we have secured all our sell positions right now, let's see what to look out for today. So before we do that, we want to scale up into the 4 hours time frame. We want to see what is really going on in this market from an holistic point of view, after which we come back into our 1 hour time frame to make a decision. So I think I will have to go a little bit higher into the daily time frame. So let's load up the daily time frame chart. Okay, so here we are on the daily time frame. And on the daily time frame, remember we have this key level. And I told us all yesterday that this key level is going to be a major determinant of price action for this week that if buying pressure continues above that key level, we are going to be looking out for buying opportunities back into the $24.50 level before another wave of bearish momentum happens. And I also mentioned here that if the choppy situation around the key level continues, leading to the breakdown of that key level at the $23.50 level, we are going to be looking out for selling opportunities, which is exactly what has happened here in the last 12 to 15 hours. And another thing I'd like to call your attention to here is the impulsive move we noticed that started in the month of March, bringing price into the structure before we saw this choppy situation going on. And I told us all here that this could be as a result of profit-taking activities, as those who bought the XAGUSD at a very cheap price at around the $20 mark might likely want to be taking some profit at this point. And because of this expectation here, we might likely see a retracement phase in that regard, which is already what we are seeing in this market right now. And how far that retracement phase is going to go is what we don't know. Is it going to go as far as the trend line? That is price going to drop to as far as the trend line here before another opportunity to buy comes in? Well, depending on what happens in the nearest future will determine if that is going to be the case. But right now, we want to keep our focus around where price action is right now to see if we could actually take advantage of an opportunity from that point. So let's scale back down into the 4 hours time frame and let's look at what is really going on here. So I will zoom just right into the current structure. And here we are. Okay, that's a $23.50 level. So we finally saw price action break down the $23.50 level here during the early hours of today. And you all know from a technical standpoint, when price action breaks down that structure, a key structure like this, we want to see price come back to retest the level to incite another wave of bearish momentum. So for those who had missed out on the sell position here, let's wait and see if the market will be coming back to retest the structure to incite another move to the downside. So that is one scenario we are going to be looking at. Then another possibility that could happen here is price action could transition into a consolidation phase, leading into the breakdown retest of that choppy situation to give us an opportunity to sell. So let's scale down into the 1 hour time frame, after which we are going to be making an informed decision. So when we scale down into the 1 hour time frame, I already spotted a structure around the $23.30 area, I guess. Hold on a second. Okay, I think it's $23.34. So let's map this out. Let's mark this out. $23.40. Okay, so we have a structure around that area, which I told us that we can move our stop loss right above that level to secure the current sell position. And also we have another structure at the, hold on a second, at this area here. That's the $23.15 level. Okay. So we have two key structures at this point. So it now depends on what happens around the $23.15 level in the next couple of hours. So if it so happens that buy pressure resumes around that area, we might likely see price climb up into the $23.40 level. It now depends on how price action reacts to the structure that will determine if we are going to be selling from that area. So if selling pressure resumes there, we want to sell to the downside with a sell stop order below the $23.15 level to add more position to our existing trade. But if price action breaks out of the $23.40 level by pressure above this area, remember, we are not part of this bullish move, as we want to stay at the $23.50 level, waiting for price action to give us a retest of that structure to incite a bearish move to the downside. So that is how we are going to be trading this if buy pressure resumes around the $23.15 level. But if price action continues in such a way that we have a choppy situation where price action falls into a range, a breakdown retest of the $23.15 level will give us a trend continuation pattern. So this is how we are going to be trading the XAGUSD today. So we still hold on to a bearish bias for today. Now, to make things more easy for us, we want to acknowledge the bearish momentum since the beginning of the week. So I want to draw my trend lines connecting the series of lower highs so that we can use it as a reference point for our trading activities going forward. So after connecting the series of lower highs, I have a trend line figured out here. So we are going to be using this trend line going forward. So there is a likelihood that price will come back and retest that structure. And you can see, interestingly, the $23.50 level shares a confluence with that trend line. So depending on how price action reacts to that trend line will determine if we are going to continue with our sell bias or get ready to buy. So a breakout of the trend line definitely will be welcome in buy position, but we want to see price action retest the $23.50 level, buy pressure above that structure to feel comfortable buying the XAGUSD today. So this is what we are going to be using to guide our trading activity. So the major one here is the trend line. So as long as price action remains below that trend line, we shall feel comfortable in our sell position for this week. So let's see how price action plays out going forward. So that is that on the XAGUSD for today. If you have any questions whatsoever, feel free to let me know right in the comment section. So I will be moving on into the last pair for today, which is the USDJPY. All right, so on the USDJPY, what was our plan yesterday? So on the USDJPY, we had our key level at the 137.800. If you remember, we had our key level here. And what we normally do when we have key levels is that we want to be using it to guide our moves. If price action remains above the key level, we look out for buying opportunity. But if price action breaks down the key level, we look out for selling opportunities. And in addition to that key level, we were able to spot a flat channel where price action was initially ranging between the 138.00 and the 137.500 for the first 10 to 12 hours of the week. And with the buy stop order above the 138.00 area, we had our buy position triggered and price action moved significantly well, about 70 pips in our favor before the sell pressure resumed, taking us out of our buy position. And I do hope you moved your stop loss accordingly to secure the buy position before you are taking out. And if you had done so, you would have been able to scoop at least some profit in that regard. And since price action tested the 138.750, we have noticed here how price action had been caught within a choppy situation between the 138.750 and the 138.400 to emphasize the level of indecision in this market. So my center of focus for today is going to be between the 138.750 and the 138.400. As you can see here, as you all know, we have no other choice than to remain patient. Remember, whenever we have this kind of flat channel, we want to remain patient, waiting for price action to give us a signal, which is likely going to be coming in the form of either a breakout of the resistance line to give us a buy opportunity, or the breakdown of the support line to give us selling opportunities in this market. Now, one thing about the breakdown of the support line here is that we are not going to be having a sell stop order. Instead, we want to see price action break down significantly well, retest of structure in our lower time frame to give us an opportunity to sell. If that does not happen, we are not considering selling the USDJPY. But for the buy expectations here, I'm having a buy stop order above the 138.750. Obviously, it has been bullish in the last couple of weeks. So I'm still tending towards a bullish momentum in this market. So I want to have a buy stop order above the 138.750 with the hopes that price action will continue to the upside. And remember, for the buy position, we have our TP target between the 139.100 and the 139.650. And if that is going to be the case, we'll have a minimum of 46 to a maximum of 100 pips around the if price action breaks out of the 138.750. Now, in addition to the structure here, I want to connect the series of higher lows. Since the beginning of the week, we have been witnessing higher lows here. Price action has been bullish. So I want to connect the series of higher lows. So I'm thinking that we should use this structure here to guide our trading activity. Hold on a second. Let me see if I can project this one into this current structure. Okay, I don't think it can work. So we are going to be connecting this one. And let's see how this one plays out in the next couple of hours. So price action is above that trend line. So if it breaks out of the 138.750, it could still come back to retest the trend line. To retest trend line to incite another wave, welcoming more opportunities on this one. So let's see how price action plays out on the USDJPY going into the New York session today. So we are looking forward to buying opportunities as long as price action remains above that trend line. And if price action breaks down the 138.400, breaching the trend line, then at this point we want to consider selling the USDJPY. And one thing I want us to note here is that when we sell had the breakdown retest of the 138.400, we want to ensure that we be on standby to secure our positions as price action moves to the downside, because this is a counter trend opportunity. And remember, we have a key level here at the 137.800, where depending on what happens here will determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy from that level to the upside. So these are my views here on the USDJPY for the week. I hope you are able to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on these pairs we talked about today. And I'm very sure we are ready for the New York session, as we were able to simulate all the potential scenarios that might likely happen. So just make sure you mark out this level so that whenever price action gets into this area, you'll wait for price to mature, give us a good setup, then we could join the move. Ensure all positions we have running right now are well secured. Move your stop loss accordingly. Lock in this profit, as we have some medium impact event coming up later today, which might likely cause some spike in price movement during the New York session. So on this note, I wish you best of luck during the New York session today, and hoping to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.